Welcome back to our video series on the US tax reform. Today we want to focus on the state taxation. Elisa, we talked already a lot about the changes on the federal level. Obviously it's always important to consider in the US as well what happens on a state level. So what impact has the tax reform on a state level?
Well, unfortunately, and I know a lot of people don't like to hear this, but it's going to have to be determined on a state-by-state basis. So each state has their own set of laws, and each state also differs in how they might conform to the federal law. So for example, some states conform automatically, so when there are federal changes, they're automatically incorporated into state law. Other states will conform on a specific date, so they may conform like as of December 31st, 2016. So ultimately, it's going to be decided on a state-by-state basis, unfortunately.
But I mean, how does this impact German Mittelstand companies?
Well, I think a great example would be like bonus depreciation, right? So we talked in a different one of our series about the new full expensing provisions. So let's say that the state actually, automatically conforms to the federal law. Then that particular depreciation expense, the full expensing, will be automatically deductible at the state level. So that's a great thing. If they conform as of a certain date, so an earlier date than when the date of this legislation is effective, so earlier than January 1st, 2018, then you would have to actually apply the old laws for that state purpose and apply the new law for federal purposes. The same would be true, for example, if you were dealing with like interest limitation. You could find yourself in a situation where you are applying the new interest limitation rules at the federal level and you're applying the old interest limitation rules at the state level, which I really hope is not going to be the case. I hope they will all get their act together and will eventually conform. But in the end, I think this is just going to be more of a compliance exercise than anything, because the states and the way that they actually apportion income and the rates are relatively low for most states. I don't think it's going to be a huge impact with respect to getting taxable income and the tax on that, but I think it's going to be a compliance nightmare.
So I guess it is pretty much as always in US taxation. You always have to consider federal and state taxation.
Absolutely.
Elisa, thank you very much. And I hope you enjoyed this, and we have more videos out there where we explain more of the changes of the US tax reform. Please watch them.